Hi class, so this is my pre-recorded discussion on Module 4. This module covers the depreciation methods for this topic specifically. No? So topics for discussion in this module there are 7 topics. 5 main topics are number 1, the SLM or the straight line method for depreciation. Number 2 is the declining balance method. Number 3 is the DDB, or in other terms, the double declining balance method. SYD refers to the sum of the year's digits, and SOM is the service output method. Okay. So I'll be discussing first on the first 5 topics, and then we will be having another 2 supplementary topics for depreciation. So what is depreciation, by the way? And why do we need to cover it in our discussion, no, on engineering economics? So, depreciation is the loss of value. It can involve deterioration and obsolescence. It is a reduction in the value of an asset with the passage of time due to particular wear and tear. So it is the decline in assets value over time. So basically it is a reduction in the book value of your equipment. So what is depreciation accounting? So the main function is to account for the cost of fixed assets in a pattern that matches the decline in value over time. Okay. This refers to capitalized costs, and their costs are distributed by subtracting them as expenses from gross income, one part of a time over a number of periods. So the systematic allocation of the initial cost of an asset in parts over a time, known as depreciable life in means accounting depreciation, or more commonly known as asset depreciation. You will be covering this one in your topic with regards to accounting, if ever your course have one. No? But what is the process of depreciation, DI? No? So first off, you should know what is the cost of the asset. Number 2, what is the depreciable life of the asset? Number 3, what is the asset's value at the end of its useful life? Or in other terms, this refers to your salvage value. Number 4, what method of depreciation would be used for the depreciation? So what are depreciable assets there? So in other terms, it is a property for which a firm may take depreciation deductions against income. Number 2, any depreciable property must be, number 1, be used in the business or held for the production of income, have a definite service life which must be longer than 1 year. Bear with that. And it sometimes wears out, the case gets used up, becomes obsolete, or loses value from natural causes. No? So nato tayo gitawag nato nga wear and tear. A depreciable property naman, this includes buildings, machinery, equipment, vehicles, and some intangible properties. What is an intangible property? Example is, it has a value but cannot be seen or touched. Examples kay kanang copyrights and patents, customers and subscription list, designs and patterns, and number 4 are franchises. So the cost basis of an asset, so it represents the total cost that is claimed as an expense over the asset's life. It is the sum of the annual depreciation expense, it includes the actual cost of the asset and any incidental cost. So bear in mind the incidental cost, okay? So what are incidental costs? So these are examples for incidental costs are number one is freight, site preparation and installation. Say for example, nagpalit ka o you're trying to buy a cell phone for your business. The price or the value of the cell phone that you bought is around 50,000. Since you ordered it online, it has a shipping fee and a processing fee. Okay? So say for example, the shipping fee is 1,000 and the processing fee is 500. So the total cost for your product is not 50,000. You should add up the other incidental costs such as the freight, which is 1,000, and if the processing fee, which is 500. So basically, the total cost for the cell phone that you bought is equivalent to 51,500. So let's say, for example, we have a certain sample problem. So Raymond Stamping Services purchased the stamping machine priced at $21,500. So the firm has to pay a sales tax of 1,200 on this purchase. So Raymond also paid the inbound transportation charges of 525 on the new machine, as well as labor cost of 1,350 to install the machine in the factory. So in addition, Raymond had to prepare the site before installation at a cost of 2,125. So determine the cost basis for the new machine for depreciation purposes. So knowing that the cost of the machine is 22,700, that refers to it, the additional tax is part of the cost of the machine. So adding up all of the incidental costs, the total cost of your machine should be equivalent to 26,700. So this is the depreciable value of your machine. Okay? So what is useful life? How long will the asset be used in the company? That is what we refer as our useful life. Salvage value. It is an estimate of the value of the asset at the end of its useful life. Why does we need to have a salvage value? Some equipments, Mango, they have a salvage value or you can sell it at a certain price after its useful life. So that is what we call as our salvage value. So what are the different types of depreciation methods? No? Number one is the book depreciation methods. This is what we will cover on this module 4. It is a depreciation method for usage in financial reports. It can be seen in your balance sheet and income statement for any businesses. Number two is the tax depreciation method. So it is intended for the IRS or BIR for the purpose of calculating the taxes of the company. So book depreciation method enables the firms to report depreciation to stockholders and other significant outsiders on the basis of the matching concept. So therefore, accounting loss of value of the assets is generally reflected. Tax depreciation method. It allows firms to benefit from tax advantages of depreciating assets more quickly than would be possible under the matching concept. So say for example, imong 50% imong ipabutang anak niya depreciation for the first year. So that will be deducted from your income because it will be considered as an expense. So mas gamay kag tax na mabayaran. Okay? But the tax depreciation allows firms to defer paying income taxes. No? So at least earlier siya, mas gamay yung tax na bayaran. Kaya it will fall into as an expense. So what are the 5 types of the book depreciation methods? So number 1, there is what we call as the straight line method. Number 2, that is DBM or the declining balance method. And then for declining balance method, there are three subtopics for that one. Number 1 is the Matheson equation. Number 2 is the declining balance method with a certain multiplier, or you should have to get your alpha. And the second one is the double declining balance method. The third book depreciation method is the sum of the year's digits. The fourth one is the service output method. And lastly is the sinking fund method. So to start off, let's understand what is straight line method of depreciation. So it interprets a fixed asset as an asset that provides its service in a uniform fashion. Your assumption for this one is that the machine can give you the same value of output all throughout its useful life. So the asset provided an equal amount of service in each year of its useful life. Okay? So the depreciation rate is equivalent to 1 over n, where n is the depreciable life of your machine or equipment. So book value decreases linearly with time kung when we come to discussing on SLM. So the DT or the annual depreciation charge, it equals to B minus S over N. B is the cost basis for the equipment. S is the salvage value and N is the number of years. So therefore, the book value of 30 years is equal to the book value or the first cost minus the accumulated depreciation. So we have a sample problem right here. So consider the following data of an automobile. Cost basis for the asset is $10,000. Its useful life is 5 years. And its estimated salvage value is $2,000. So how should we compute with your depreciation? The assumption for this one is that you have the same depreciation amount all throughout the 5 years. Okay. So by formula, your depreciation is equal to the first cost minus the salvage value over N. Therefore, the depreciation is equal to 10,000 minus the 2,000, which is the salvage value over 5. So the depreciation value sa imuhang automobile every year is equivalent to 8,000 divided by 5, which is 1,600. So that would mean every year it would depreciate a value of 1,600. Okay? Knowing that the book value on your first year is 10,000 or in the year 0, kaya wala ka man kay depreciation, minus the 1,600. So 10,000 minus 1,600 is 8,400 ang iyahang book value at the end of its first year. 6,800 on the second year, 5,200 on the third year, and 3,600 on the end of the fourth year, and $2,000 at the end of the fifth year. So that is how we will compute our depreciation using the straight line method. Coffee, anyone? So this is 1,000. Okay. So here is the summary of the computation for the straight line method depreciation. Next, what is declining balance method? It recognizes that the stream of services provided by a fixed asset may decrease over time. Paano siya? Basic. The stream may be greatest in its first year of an asset's service life and least on its last year. This pattern occurs because mechanical efficiency of an asset tends to decline with age, or because of the increasing likelihood that the better equipment will become available and make the original asset obsolete. So we will be referring to charges of a larger fraction of the cost as an expense earned the early years of the machine and lower on the later years. Therefore, you are to get a certain alpha, no? Wherein your alpha is equal to 1 over n multiplied by the multiplier provided in the problem. Okay? So, what is alpha and what is multiplier? Okay, so sample problem, assuming we have the same problem, multiplier is 150%. So therefore, we should get first what is your alpha. By formula, your alpha should be is equal to 1 over n multiplied by multiplier. Therefore, you already know that 1 over 5 years multiplied by 1.5 or 150%. That is equivalent to 0.3 or 30%. That would tell you that ang imong depreciation value is a 30% on the assets book value at the end of each year. So we all know that this is 10,000. Okay? Multiplying it by 30% as your alpha, your depreciation value or D is equal to the book value multiplied by alpha. That is your depreciation value. So 10,000 by times 30%, meaning that on your first year, you have a 3,000 depreciation value. Okay. So 10,000 minus 3,000, that is basically 7,000. So 7,000 times 0.3, your depreciation value on the second year is 2,100. 4,900 is the remaining book value. This is 1,470. So 49 is 3,430. This is 1029. This is 2,401. This is 720.30. So this is 1,680.7. Okay. What's the problem? So basically, on your last year, it is wrong. Why? If you are to depreciate a value of 720.3, your book value at the end of the fifth year is 1,680.7, which is way lesser than your salvage value. So therefore, instead of 720.3 ang imuhang depreciation in the last year, it should be adjusted to only 401. Thus, by adjusting your depreciation value to 401 on the fifth year, it will give you a salvage value of 2,000. Why do we need to adjust that one? Because under the tax code, you are not allowed to depreciate the value of a certain asset beyond its what? your salvage value. Okay? I'll proceed. So this is the summary of the discussion on the declining balance method. So tax law does not permit to depreciate the asset below their salvage value, by the way. So now we already know that tax law does not permit any company to depreciate the asset of a business, no, beyond the service value. So this is the solution for the declining balance method with a multiplier of 150%. Next topic is the double declining balance method. So what does that mean? So it is a form of a depreciation method in which the asset value is depreciated twice the rate as done in the straight line method. So since the depreciation is done at a faster rate, twice to be precise, of the straight line method, it is called an accelerated depreciation. So each depreciation is 200% versus the straight line method. Now, you already know na the multiplier for a double declining balance method is equivalent to 200%. Okay. Therefore, getting the solution for the same problem at a multiplier of 200%, your alpha should be 1 over 5, so multiplied by 200%. So your alpha is equal to 40%. So this is your multiplier in getting the depreciation value for every year. So if you have an asset value, book value of 10,000 at year 0, multiplied by 40% on its first year, your depreciation amount is equal to 4,000. So the remaining book value at the end of year 1, that is 10,000 minus 4,000, that is 6,000. Succeedingly, this is 2,400. This is 3,600. This is 1,440. This is 2,160. This is 864. This is 1,296. This is 518.40. This is 777.60. So where did we get it wrong? So since knowing that the double declining balance method kay accelerated ang imong depreciation, as you can see in the fourth year, the book value of your asset at the end of the fourth year is 1,296. Meanwhile, your salvage value should be $2,000. Therefore, instead of depreciating it by a value of 864, your depreciation value na actual for the fourth year should only be 160. Therefore, that is not 1,296. Your salvage value is 2,000. And on the fifth year, you do not have any depreciation value. Okay? Be mindful for the adjustments when it comes to the declining balance method and the double declining balance method. So here is the solution of your double declining balance method is shown. So that the multiplier is 200%. So sum of the years digit method na po, no? So what does that mean? So it is the sum of the years digit is a form of an accelerated depreciation that is based on the assumption that the productivity of the asset decreases with the passage of time. So under this method, a fraction is computed by dividing the remaining useful life of the asset on a particular date by the sum of the years digits. So how do we go about this one? Assuming you have the same problem. When you say SYD, you should sum up the years digits of the useful life. How? You have to 1 plus 2 plus 3 plus 4 plus 5. Therefore, that is 15. Okay? So that would mean that the sum of the years digit is 15. If we are to compute the depreciation on the first year, atong balihon, we will start off with the largest value, which is 5. Divided by 15 ang sum of the years digits, diba? And this is 4 divided by 15. This is 3 over 15. This is 2 over 15. And this is 1 over 15. This is what you call as the fraction of the depreciation value, multiplied by the depreciable life or depreciable value. We all know that the depreciable value of your asset is only 8,000. So therefore, multiplying this one by 8,000, 8,000, 8,000, 8,000, 8,000. Okay? So that would mean that on your first year, 5 divided by 15 times 8,000, your depreciation value is 2,666.67. Okay? That will give you a book value of 7,333.33. Okay. 4 divided by 15 times 8,000 is 2,133.33. So 7,333 minus 2,133, that is 5,200. So on the third year, that is 3 divided by 15 times 8,000. That is 1,600. So 52 minus 16, your book value at the end of the third year is 3,600. So 2 divided by 15 times 8,000, your depreciable value is 1,066.67. So 3,600 minus 1, that is 2,533.33. 1 divided by 15 times 8,000, that is 533.33. So therefore, your book value at the end of the fifth year is equivalent to $2,000. Okay? So be mindful lang. Say for example, if it is 7 years, you should sum up the digits of 1 to 7, and the depreciation value on the first year is the fraction on the last year na 7 out of the SYD. So here is the solution for your SYD solution on the sum of the years digits for 5 years. Service output method. So when we are looking into the service output method, it refers to the units of production depreciation method. So it's also known as the units of activity and the units of usage method of depreciation. So, imo siyang i-depreciate by the number of units na iyahag yung actually na produce. No? For example, a machine may be depreciated on the basis of output during the period of proportion, output produced during a period in proportion to its expected production capacity. Therefore, useful life of an asset under the units of production method is stated in terms of production output or usage rather than the years of service. So we have a sample problem right here. A truck hauling coal has an estimated net cost of $55,000 and is expected to give a service of 250,000 miles, resulting in a 5,000 salvage value. Compute the allowed depreciation among for the truck usage of 30,000 miles. So, pila di ay? So, knowing na ang imuhang depreciation or depreciable value is equal to 55,000 minus the 5,000, that is your depreciable value. No? Kay service value ng 5 years. Divided by the number of miles. Iyahang expected nga service capacity. So that is 55,000 minus 5,000 divided by 250,000. Meaning, your depreciation is equivalent to 0.2 per mile of service. Okay? That would mean that if you have a usage of 30,000 miles multiplied by 0.2 per mile, the depreciation value of a 30,000 miles is equivalent to $6,000. So that is based. So for problems lang, you are actually given the service output on the first 5 years. Say for example, you have a problem of 5 years, but always remember that tax depreciation does not allow depreciation beyond its service life. So if on the 5th year, ni-excess siya sa iyahang capacity, you should only depreciate its value based on the depreciable nga nahabili na lang. So here is the solution. So the book value for the hauling is equivalent to 49,000. No. So right now we are already able to discuss number 1, declining balance 2, 3, this is 4, and this is 5. Okay, so right now we will be discussing on the succeeding topics. We have 2 supplementary topics for this module. Number 1 is the Matheson equation. So what is Matheson equation? Or the Matheson formula? It goes by the same it goes by the same knowledge or understanding with regards to declining balance method. But it is assumed that the annual cost of depreciation is a fixed percentage of the book value at the beginning of each year. No? So instead of multiplier for the declining balance method of method, and then you have a 200% multiplier for the double declining balance method, kani siya, you are assuming a fixed percentage of the book value at the end of the first year. So it is, in other terms, a constant percentage method. So what does that mean? It means that using a constant percentage, you are constantly depreciating the value of your asset such that at the end of its fifth year, wala kay adjustment. So the value of K is equal to 1 minus to the nth root of Cn over Co. Or the subsequent formula is 1 minus to the mth root of Cm minus Co. Okay? So be mindful of the formula. No? So the value of K is the constant percentage that must be a decimal and a value less than 1. The salvage value or scrap value must not be equal to 0 for this type of problem. So given that this is your problem right now. Number one, let's solve for K. So in sa depreciation or sa declining balance method, we need to get the alpha from the multiplier. For this problem, we need to get the K. So therefore, the K is equal to 1 minus how many years? 5 years. CO, that is 10,000 over 2,000 salvage value. Am I right? Let's go back to your formula. Okay? So therefore, that is 10,000 divided by 2,000 to the exponent of 1 over 5, 1 minus 0.87. So that is how much? Oh, napali na. So, I erase first. So, K is equal to 1 minus the fifth root. Okay, 5 years man siya. Cn refers to the salvage value, which should not be equal to 0. So, therefore, that is 2,000 divided by 10,000 to the exponent of 1 divided by 5. 1 minus answer is 27.52%. So, ang imong depreciation na percentage every year is about 27.52%. So, therefore, this is 10,000. So, on your first year or in your year 0, you have a 10,000 book value multiplied by the 27.52%. That is equivalent to 2752.20. Okay. So the book value is 7,247.80. So the 7,247.80, masa na imong i-multiply on the K. So this is 1994.74, 7247.80 that is 5253.06. Okay, so this is 1445.75. This is 3,807.08. This is This is 2759.46. And this is 759.46. And this is 2,000. So, as you can see, when you're looking for decay and solving it on a constant percentage, at the end of the fifth year, the book value is exactly your salvage value. In that way, you do not need any adjustments on any of your year's depreciation value. So, if during the exams or during your exams and module quizzes, if the problem states a declining balance method without a multiplier provided, that problem refers to the Matheson equation. Okay. So by solution, this is your solution for the declining balance method using the Matheson equation. So I'll proceed to the sinking fund method. This is the last topic for module 4, which is the sinking fund method. Sinking fund method, what does that mean? It is assumed that the sinking fund is established in which funds will accumulate for the replacement purposes of your equipment. So the annual depreciation charge is D is equal to CO minus CN multiplied by I over 1 plus I to the exponent of N minus 1. Sabi nilagay ka ng formula, sir. If we'll try to rearrange your equation, your D multiplied by 1 plus I to the exponent of N minus 1 divided by I is equal to CO minus C. What would that be meaning? Meaning, this is your formula for an annuity with the future value. Okay? Knowing that the future value is the depreciation value or the depreciable value of your asset. Okay? CO refers to your first cost. CN is the cost after 10 years or what we call as our scrap value. And N is the life of the property. Okay? So in other terms, your F or the future value is the CO minus CN. Okay? Now, by formula, the book value at the end of M years using the CM is equal to the CO, which is the first cost minus the accumulated depreciation or the DM, where DM is the total depreciation after M years and DM is equal to D, 1 plus I to the exponent of M minus 1 over I. Still, this is sa inyong annuity na equation, this is your future value for an annuity on number of years. So, pila siya ka years na na-depreciate. Okay? So, say for example, we have the same problem. So, the cost of the asset is 10,000. Your useful life is 5 years. Your estimated salvage value is 2,000. And your I is 4. Assuming you need to get the depreciation value. So, the depreciation value is equal to pila ganitong equation class. So, ito yung formula. Anybody? That is CO, that is 10,000. Minus 2,000 multiplied by 0.04 over 1.04 to the exponent of 5 minus 1. Therefore, your depreciation value is 1.04 exponent of 5 minus 1.04 divided by times 8,000. So, the depreciation value nimo on every year is 1477.02. 1477.2. Okay. The book value here is 10,000. So, kung maingon ka, let's try to have a cash flow. No? So, kung maingon ka cash flow, cash flow. Money mo ang 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. You have a depreciation value going down at this one. And then you have the future value at as equal to 8,000. So, if kuha mo yung depreciation value on the first year or the summation of this one or kanang accumulated depreciation for that one, that is an annuity for 1 year. So therefore, that is 1 or D, 1 plus I to the exponent of n minus 1 over I. So the future value at 1 year. So this is, I'll store first 1.04 to the exponent of 1 minus 1 divided by 0.04 times the depreciation. So meaning, your accumulated depreciation on the first year is 1477.02. So 10,000 minus the accumulated depreciation, that is 8,522.98. Next, I'll try to compute again the accumulated depreciation for the first 2 years. So that is by the formula, I'm using this one. So that is 1.04 to the exponent of 2 minus 1 divided by 0.04 times the depreciation. This is 3013.11. So therefore, 10,000 ang imuhang kuan gyapon kani siya dili ang kaning 8,522. So 10,000 minus the accumulated magud na siya din depreciation, that is 6,986.89. Next, for the third year, so 1.04 to the exponent of 3 minus 1 divided by 0.04 times depreciation, that is 4,610.66. So 10,000 minus, that is 5,389.34. Fourth year, 1.04 to the exponent of 4 minus 1 divided by, that is 6,272.10. This is 8,000. Therefore, this is 2,000. Three, 727.90. So as you can see that the book value at the end of the 5th year is equal to 2,000. So this is how we compute for using the sinking fund method. Okay, so that is your solution for the sinking fund method using the following given. So that is the last part of our module 4 discussion. Hopefully, everyone was able to understand the topic, and we will have a live question and answer portion for this discussion. Okay, so hopefully you get to understand the topic, and during our live Q&A, it would be a better understanding na lang or a better na lang na discussion for clarification on certain topics on the module. Thank you and bye.